Hey y'all, and welcome back to Get It Digital with Deja. So, today we're back to talking about the things that we can't control that control our money. So, let's go ahead and hop into it. And today we're going to be talking about the SEC, which stands for the Securities and Exchange Commission. So, we're going to start off with the textbook definition of their role. And it states it oversees security exchanges, brokers, dealers, investment advisors, mutual funds, etc., ensuring companies provide accurate financial disclosures and preventing fraudulent activities in the market. So basically, what this is saying is that it protects investors and market participants from any fraudulent activity and from any misleading information. And it also requires companies to be completely transparent with any like charts or anything that they have going on within their company as far as news, their reports, their financial statements, and things like that. All those things have to be transparent for the investor because if you think about it, you don't want to invest inside of something that you have no idea what it is. You don't know what their numbers are looking like, what their revenue is looking like. You're just blindly investing inside of something. That's how you can blindly get your money taken away from you. And no, you don't want that. So they created a set of rules and regulations that have to be followed by all of the market participants, not just investors. And if anybody goes against these rules and regulations, the SEC can form a civil case against them. And one of the most notable cases filed by the SEC is the SEC versus Ripple. So, if you're new to my channel, you might not know this, but I am a proud supporter of XRP. It's XRP to the moon. I have full faith in it. With that being said, the whole reason why I kind of did a deep dive inside of the SEC is because the SEC has been coming for Ripple slash XRP for quite a few years because crypto is relatively new. You have to understand it is an unregulated market. And these things aren't necessarily listed as exchanges, but they are, as securities, but they are being traded and things like that. So the SEC was like, hold on, we have to figure out some regulations and stuff for this crypto. So the court case was essentially about if Ripple or XRP would be considered a security or not, because if it is considered a security, it would have to follow under the regulations that the SEC has in place for all security and exchanges in all trading markets. And XRP was like, we're not a security. And SEC was like, but you are. So that's where the whole drama came in. So like I said, this has been going on for a couple of years. It has recently ended, but it started back in 2020 because essentially the SEC was like, okay, you're trading all of these tokens, trying to raise $1.3 billion is what Ripple was trying to raise. So if you're selling and trading XRP and trying to raise $1.3 billion, this has to be some type of regulation behind it because people can get things like rug pulled and things like that in crypto, which is why crypto is probably one of the riskiest financial markets that you can enter. So the SEC was trying to create some regulations on there. But Ripple combated that by saying XRP is not like a commodity or anything like that. It's actually a digital currency, essentially just facilitating the movement of money to make things run a lot smoother and a lot less expensive to where it takes the banks out as the middleman. And that was their fighting argument for it. And I really do believe that the SEC filed this in the first place because they were seeing that different markets were starting to emerge to where the SEC wouldn't be empowered and they wouldn't have any say so. And of course, if somebody's in power over basically all of the financial markets, why would they let another financial market come in and kind of, ruin what they got going on? So basically, the judge gave a mixed ruling. They kind of ruled in the favor of both the SEC and of Ripple by saying that XRP had to be classified as a security if they're trading it within like institutions and banks and things like that. But if it's used for just retail investors or people just, on their trading platforms just trading XRP, then it wouldn't be considered a security, which was good for both sides because it still allows the SEC to have power over cryptocurrency. But it was also really good for Ripple because the less regulations you have on something as far as like XRP, the more to the moon it can go, the more things that you can do with it. When there's rules and things in place, it kind of stops different opportunities from being able to present itself. So more investors are now starting to adopt XRP more because it recently just ended this year. This battle that they were going through with the SEC, and I believe that XRP had to pay they demanded that XRP pay 125 million, but XRP was like, no, we're actually going to pay you 50 million and you're going to shut up. You guys, I'm redoing my hair tomorrow, but look at these edges. She did them. The SEC has basically made it its mission to gain control over the cryptocurrency market because it's so unregulated and just there's so many risks involved. So they did have another suit, which was the SEC versus Coinbase, and that started back in 2023 and didn't end until February of 2025. So basically, with this case, the SEC was stating that Coinbase was acting as a unregistered securities exchange and broker, especially having to deal with crypto assets, because Coinbase is one of the biggest platforms that you can buy and trade any really cryptocurrency that you can think of, which is pretty amazing. Being that it was like kind of an investment app at first, and now it's like a trade crypto app. So that just kind of shows you how much influence crypto has had on the financial markets. So Coinbase combated this by saying the SEC didn't have any set regulations on crypto as far as if it was considered an asset or if it was considered a security. So it was listed on the crypto, not on crypto, it was listed on Coinbase as basically just an asset, not as a security. So in reality, it shouldn't have been under any regulation. So Coinbase created the Crypto Task Force, which is just basically putting regulations on crypto and any crypto trading. And so the case was dropped, and now you can freely trade XRP and any other digital asset on the Coinbase network. So these crypto cases filed by the SEC being dropped is really good for the crypto market because it just kind of shows you that digital assets and digital securities are the way of the future. Whether that is a bad thing or a good thing, I'm going to stay out of that one, but it is the way of the future. So basically, to sum up all the information that I said today, the SEC is basically over all trading aspects in any trading financial markets like exchanges and things like that. They create the rules and the regulations to make sure that the investors are not being taken advantage of and that the companies and brokerages are also playing fair and by the rules. And this is really great for investors because it forces companies to be transparent. And literally, companies news and things like that is what we trade based off of, you know? So I believe everybody working together as a whole is what makes the markets feasible and make it work. So without the SEC, it would be pretty bad. But at the end of the day, they do control your money. They control what you can do with it, what you can invest into, how you can invest into it, different things like that. So that's why I wanted to include them this week on things that we cannot control that control our money. So tomorrow we will be talking about the Federal Reserve, and they are the ones who really actually control everything. They're the big dogs in the market, which is why I'm saving them for last. Okay. But before I go, I wanted to remind you, pretty girls can do trading too. All right, I'll see you guys tomorrow.